Welcome back. You're watching The Money Show on ET. Now it's time for our Meet Your Fund Manager segment. And today, the fund that we'd like to talk about is the Invesco India Contra Fund. The manager is none other than Taher Badshah, who is also the CIO of the Invesco Mutual Fund. There you have it. What a great performance seen, especially if we look at decadal returns. In fact, it's been one of the best performers on a decade basis. 14% is the XIRR, or roughly the annual return that an investor has got every of the last 10 years if they've invested in the Invesco Mutual Fund as an SIP for the last 10 years. Moderately high risks. So let's talk about the fund and more with Taher Badshah. Taher, thanks so much for joining in on The Money Show. To start off with, tell us a bit about the fund. You follow, as the name suggests, a contrarian investing strategy. What exactly does that mean?
Well, so obviously the name of the fund is Invesco India Contra Fund, so that's our brand. But this is basically, yes, so to that extent, this fund is clearly a fund which has a contrarian bias. But it is not only about contra stocks. It is essentially a fund which has a preference for companies which are in a turnaround phase, or where there is a value proposition as well. So it's a combination of turnaround, stroke, deep value, and it also does not shy itself away from buying into some stocks which could probably be growth at reasonable valuation opportunities. So that's the mix and the overall the overall profile of the fund as such. At all points in time, our endeavor is to make sure that companies which are in a turnaround phase, stroke deep value opportunities, or derated growth entities form the bulk of the portfolio.
All right. Taher, how do you ensure the quality of the stocks then that enter the fund? What exactly is the screening or the filtering process that you follow? Because in the past as well, we've literally seen AAA rated companies as well lose their charm.
Also, we have our own proprietary stock picking framework. We call it the stock categorization framework, and which we've been using ever since over the last many years, since the inception of the company. It's essentially a framework which is quite unique, but in short, basically what it tries to do is categorize stocks into 7 or 8 different categories, depending upon what is the investment rationale behind each of these. Each of the ideas which would pass through this particular framework. So basically, we at the outset itself, whenever we are looking at any company or an idea, we try to pin down the investment rationale or the investment merit based on one of these 7 or 8 categories. So it is very important for us to make sure that any new investment idea which comes in qualitatively and quantitatively fits into one of these 6 or 7 odd categories. If that doesn't happen, then for us it is not an investable idea.
Okay, fair enough. Banking and finance seems to be forming quite a crucial part of your fund. I think that's the case with a lot of other mutual funds as well. But what makes you optimistic on the sector? Why would you bet on it as a part of your contra investing strategy?
Well, so obviously, I mean, financials is a relatively large proportion of the overall market as well. But if you were to look at Contra, currently the way it is positioned is that we are relatively underweight the sector versus the benchmark at least. So we are about 3 to 4% underweight the BSE 500, which happens to be the Invesco India Contra Funds benchmark. So yes, I mean, this is a large segment of the market. There are opportunities from a value perspective in this space. So it does form a bulk of the portfolio, a reasonably large 1/3 of the portfolio. But we the way we are structured is not as much of top-down sector selection. What you see in terms of the configuration of the sectors is essentially the bottom-up outcome of individual stock selections. But it turns out to be that at this stage we have relatively less. Comfort in terms of going significantly overweight as far as financials go. We were overweight at one point in time early in 2019. We had turned underweight some time back. So currently the value fund or the contra fund is positioned with a underweight on financials at this stage.
Okay, now like I said, the fund has delivered great returns in the past. So while you will endeavor to continue or perhaps even exceed that run rate, what should be an investor's expectation?
So, well, I think if you look at the last 3-year returns, it'll probably aggregate somewhere around a 15% CAGR, 14 to 15% CAGR, which is fair if you look back and consider the economic growth cycle that we've had in the last 3 years. So, in that backdrop of a relatively or not so great economic cycle, a 15% return is what has been possible. So, and which again, like as I mentioned, comes out of a combination of earnings growth as well as re-rating. So I would think this 15%, if I were to break it down in my mind, it would maybe be about 10% driven by earnings and the balance 5 odd percent driven by valuation expansion. So this is what can be the outcome in a situation where the growth cycle is relatively modest or moderate. I think if we get a superior growth cycle, and we've seen that happen even in the past in case of the Contra fund, we may have a 3-4 year growth CAGR of maybe even closer to 20%.
Okay, great. Let's hope you can deliver that. Good luck. Taher, thanks so much for joining in, folks. I hope this will help you and enable you to take a decision on whether you'd like to invest in the Invesco Contra India Fund. We'll take a very short break, but when we come back in our Spend with TMS segment, Hormuz Sarabji of Autocar India will be joining us to talk about the latest fad and the whole bulk of facelifts that car companies have been introducing in the market. Basically, version 2.0 of the existing car models in the market. Stay tuned for that conversation.